Hey traders, welcome back to Group Option Hub. Today we're diving into one of ICT's cleanest and most repeatable intraday setups, which is the ICT Silver Bullet. Okay, the Silver Bullet is actually a strategy that I like very much because while ICT setups can be a little discretionary, the Silver Bullet is actually the most mechanical in my opinion, and you can really follow 4 or 5 steps to get a setup. And most importantly, it gives you a really specific time frame window. So it's a 1 hour window. That's all your executions should be inside that window, okay? And by the end of this video, you'll understand exactly what the Silver Bullet is, how to spot it, how to trade it. And I'll also walk you through a couple of real trade examples, and so you can see my own Silver Bullet strategy and how I implement it on Forex pairs. But remember that it also works on indices. I don't really like trading indices, but if you do so, then make sure to test Silver Bullet on them. And I think you'll like how it performs, okay? So let's move on and see what is the ICT Silver Bullet. Okay, so it's a time-based intraday setup. So it's for the intraday traders and the scalpers. And it's not built on indicators or, really complicated rules or these stuff. It's really simple, and it's based on price action principles and liquidity runs, which we'll get into soon. And this is what makes it so consistent, because it's really a simple action plan that you must follow to get these setups and these trades, okay? So there are 3 main time windows. I will go to our website, groupoptionhub.com, and as you can see in this article, I've completely explained what the ICT Silver Bullet is and how you can trade it. So on this blog post and this guide, you will see here in this table, I've specified in 3 different time zones which 1 hour windows you should trade if you're going to trade the ICT Silver Bullets. Actually, these are the ICT Silver Bullet times. So a lot of us ICT traders use the Eastern time zone, or set our trading view or whatever platform you're using to New York time. So we'll focus on this. So in the London session, it's 3 to 4 a.m. Eastern time, and the New York AM session, which is the second Silver Bullet time window, is 10 a.m. to 11 a.m. And the Silver Bullet in New York PM session is the 2 to 3 p.m. time window, okay? So there are only 3 hours that you can trade. And this is a great thing because it can really help you reduce overtrading and control emotional trading, because you are not allowed to trade the Silver Bullet outside these windows because the setup is simply not there, okay? The Silver Bullet is really focused on time, and you should abide by these rules and trade only in these time frames, all right? So now that you know what the ICT Silver Bullet times are, let's go back to TradingView and let me show you what exactly we're looking for, okay? So let me draw you a sample price action. For example, look at this. The market has been, trending, and we get to, for example, 10 a.m. New York time, and we see something like this. And then this and this. Okay, so imagine this is 10 a.m. New York time and this is 11. All right, so in this 1 hour time window, what we're going to focus on is, first we're going to see a run on liquidity. So what was liquidity? I'll quickly explain. Liquidity is where retail traders and the masses put their stop losses. So when we have something like this, a range, liquidity will be resting on both sides of this range, all right? So let me lock this, and all right. So on the higher side, we have buy side liquidity. So I will mark this for you. So here we have buy side liquidity, which are the stop losses and the stop orders that are placed here, which are buy stops, okay? And on the other side of the range, below these lows, we have sell stops, or there's the sell side liquidity, okay? All right. So first of all, we're gonna look for a run for liquidity, which can occur before the time window or at the beginning of the time window or during it, okay? So sometimes it happens like 30 minutes before the beginning of the Silver Bullet time window, which is 10 a.m. New York in the New York AM session, okay? And sometimes it occurs during the window, all right? So first of all, we're gonna look for a run on liquidity. The second thing we're looking for is a strong displacement. Now, what is displacement? Displacement is a quick and impulsive move in the opposite direction of the initial trend. So for example, here we had a bullish trend and then the price displaces to the downside, and this is an impulsive move opposite of the trend, okay? And these strong displacements should lead to, leads to market structure shift. Now, what is market structure shift? Well, we have some higher highs and higher lows here, because if this is a, an uptrend, it has been something like this, probably, and then right here, these lows have been broken by this displacement to the downside, so we have a lower low now. So this is a market structure shift. Now, the second that we get a close below these lows right here, we get the market structure shift. It's a bearish market structure shift, and we have the displacement. So the third thing we're gonna look for in the displacement leg is an ICT fair value gap. Now, I don't know if you're familiar with the fair value gap. So fair value gap is basically a 3-candle pattern. Now we're gonna look for a bearish fair value gap. So a bearish fair value gap is something like this. We have 3 candles. So they might not all be bearish, so some of them might be bullish, but the most important thing is that we must have a bearish candle in the middle. So the fair value gap candle, which is the second candle in our 3-candle pattern, should be and must be bearish. All right, so imagine these 3 candles. Now, right here, we have a fair value gap. I will show it with another color. So this is the wick of the first candle, and this one is for the third candle. And the part of the second candle's body that is not covered by the third and the first candle and by the wicks will be called the fair value gap. Now, what we're looking for is for the price to retrace back into this fair value gap. And right here, we will look for entries, because the price is very likely to react to this level, and it can act as a resistance or a supply level. And we will look for further move downside, okay? So the fair value gap will be our entry. Now, where should we look for the fair value gap? In the displacement leg, okay? So it might be somewhere around here. Let's change the color quickly. So yeah, it might be somewhere around here that we get the fair value gap. So if we get this pattern inside this area, for example, the fair value gap might be right here. Okay, so we will enter here. All right, so our entry must be in the 1-hour time window of the silver bullets, and our stop loss, the stop loss I will use is above the recent high, and the take profit could be a fixed risk reward ratio, for example 1.5 or 2 RR ratio fixed, or you can target previous lows, for example right here. So let's target this one, all right, for approximately a 2.5 R trade, and this will be our trade setup. So the fourth step was enter on the FVG, okay? So here will be first detect the ICT fair value gap and then enter on it, okay? So these were the 4 steps for the silver bullets, and actually there is a step 0 that is the most important, and it's time. So specify silver bullet times. You will not be able, and you're not allowed to execute your trade outside the silver bullet time windows, which I showed you right here on our website. So these are the times, and we're imagining that we're executing our trade in the New York AM session. So our execution, where we enter the trade, should be in the period between 10 and 11 AM, okay? So let's go to the chart and let's show you some examples. All right, so here's our first example. Now we are at the beginning of the silver bullet session. I will mark this for you. The silver bullet period in the New York AM session. All right, we're gonna focus on trading this one because I love this one the most, and in my opinion it's the most consistent one. All right, so here's what we have in terms of price action. We have a consolidation. This one is a really tight range right here, and then we get a stop hunt right here and another one right here. So let me show these with red actually. So what liquidity pool has been swept? This one. So there was a lot of buy side liquidity resting right here because of the tight range and the multiple equal highs. All right, so the buy side liquidity is hunted once right here, and the sell side actually was also taken right here, which was our sell side liquidity. And we have also taken it here, and then another one above this level, which also has taken the buy side liquidity above this one. Okay, so even one high will have stop losses and liquidity above it, and we have a second hunt right here, which is also just before the silver bullet period, and then we get the displacement, which is the second step. So this is a clear displacement. It's a really impulsive downside move, which has also broken the previous low. So this will be our market structure shift. So let me point it out, MSS. Okay, now that things are bearish and we're also in the ICT Silver Bullet New York AM time window, we will look for entries. So where do we have the fair value gaps, the bearish ones? There's one right here, one right here, and another tiny one right here. Okay, so I will specify all of them for you. Here's the first one, here's the second one, and the highest is this one, which is actually also the smallest. Okay, so the fact that which one you will use for your entry is really based on your personal preference. In these situations, I personally don't like to enter on the large fair value gaps. I prefer the more standard size or normal size ones like this, or even the smaller ones. But I don't like to put my entry right here because it's really deep into premium and the price might not reach it. This one is also deep into discount. So basically I will use this fair value gap for my entry, and I will enter just as the price enters this fair value gap. Okay, my stop loss will be above recent highs. This is the recent main pivot, but there's also another high here, as you can see, which is also a fair value gap above it. So I will use this high or maybe a little above it, because this fair value gap can also reject the price. So my stop is protected a few pips above it. And for take profit, you can use a fixed risk reward ratio, for example 2, or you can target recent lows. For example, right here we have a low, so we can target this one. Or if we go back, we have some serious liquidity resting below here, so we can target these, and for a 3 risk reward ratio setup, okay, which will be a great one if we can get it. Now let's skip and see what happens. And if we get the entry, we have been tagged in right on the lower border of the fair value gap, we would have entered, and let's see what happens. So if we get the profit or if our stop will get hit, and boom, as you can see, we have easily taken a 3 risk reward ratio trade in like 30 minutes, which is great. And this setup is something that repeats like 2 or 3 times a week, and only this time period, I mean 10 to 11 a.m. on this pair and some other major pairs. And if there's a setup that can perform consistently and at least 2 out of 3 times, and it happens actually 3 times a week, you will have a 66% win rate. Okay, and if you can get on average 2 points and 2 R's from each trade, you will be in a reasonable, and I think great profit by only focusing on this setup. It's so simple, so it's actually a no-brainer, and I will suggest that all of you look into it and backtest it and see how well it works, and I'm sure you will also implement it into your own strategy and your trading plan. So let's recap again. So first of all, in this silver bullet situation, we specify the time window, which is 10 to 11 a.m. for the New York AM silver bullet, and then we focus on price action prior to it. So we see a consolidation, sell side and buy side liquidity has been formed above and below, and then we have a run on liquidity on the buy side, another on the sell side, and again another one on the buy side just before the silver bullet window begins. Okay, then we get a huge displacement and we get a market structure shift, which is our second step, and we have a bearish market structure shift. Then we immediately look back to the price action and the last leg, which was the displacement leg, and see and specify the fair value gaps, the bearish ones. So there are 3 bearish fair value gaps right here, and there's a 4th one, but I don't like entering, that high and that high into premium. So there are 3 fair value gaps, and I will use the middle one because this one is really deep into discount. This one is deep into, premium, and also this one, and it's also very small. But this one is, relatively standard size fair value gap. It's not very big because I don't like trading big fair value gaps. And you will enter as soon as the price hits this fair value gap and tests it. There's a perfect entry. It's really a sniper entry with no drawdown at all. And in like 30 or 40 minutes, you will capture your profit, a beautiful 3 RR ratio trade. And you could have held it for more even. So you could have closed right here as soon as the, first bullish candle closed for like 4 risk reward. So this is a great and, simple strategy that anyone who is familiar with ICT concepts can use. So if you like more videos like this, please subscribe to our channel and like this video, and also hit the notification bell because we're going to publish more and more videos and strategies like this for traders of all kinds. I mean, crypto traders, forex traders, and also binary options traders. A lot of, what we show on this channel can be applied to binary options. And we had a lot of binary options videos and strategies for binary options in this channel. So make sure to subscribe and also check out our blog. I will link to it in the description. And look at also the guide for ICT Silver Bullet, the written one that I showed you right here. I will also leave a link to it in the description, and you will also see some more examples and more information. And for a final word, I will always suggest to backtest new strategies. For example, if it's your first time seeing the Silver Bullet and you want to implement it, first backtest it. Use some backtesting software. For example, you can use the TradingView replay button, just as I did. And also make sure to trade on demo accounts. If you're a CFD trader, you can use your broker's demo account. It's usually free. And if you're a binary options trader, top brokers like Pocket Option offer a free demo account with normally around 10,000 simulated balance. So you can test and trade with simulated money and see how your strategy works and optimize it, and also work on your confidence in live market conditions. I will leave a link to the Pocket Option platform below so you can create a free demo account and test your strategies. And yeah, that's it. See you in the next one. Good luck and happy trading.